that's about the secondary market. There's so much action in the primary market as well, right? Eyewear retailer Lenskart is set to launch its 7,278 rupee crore initial public offering on Friday, October 31st, with a price band of 382 to 420 per share. My colleague Manglam Malu caught up with the management of the company. Listen into what they had to say.
Yeah, I think overall, if we look at eyewear as a problem or eyewear as a market, today almost 7 out of 10 adults need glasses.
Yeah.
And this number has been growing from 5 or 6 to about 7. Even if you look at children, about 20% kids used to have myopia. Now that number, as of FY25, has become 40%. And we are seeing that number is growing. If we keep that in mind, our view is that the market will continue to grow. Market will continue to grow. And at Lenskart, as long as I think we can do more and more eye tests, which we have been compounding more than 50%. To FY23, we did about 6 million eye tests. And FY25, we did 16 million eye tests. And India needs light. We have almost very soon going to have over 500 million people who need glasses. Without glasses. So I think as long as we can continue to do that, there's a lot of opportunity.
The organized market obviously likely to grow nearly 1.6 times the unorganized market. Let me ask you the numbers specifically. What rate is the market projected to grow at? In the past, what have you been growing versus the market? And is that sustainable in the future as well?
So Indian market in eyewear category has been growing at about 13%, caused by both the increasing myopia rates, increasing adoption, and people buying more eyewear per head. We have been outperforming the market, and we think we will continue to do that in the foreseeable future.
By a factor of how much?
Similar to what we have done in the past.
What has been that number in the past?
We did about 24-25% growth, and we've been adding to our share.
So 2x of the market is a number that is sustainable. Let's talk about the margins as well. You know, your operating leverage has begun to kick in. The international operations, which have a lot more margins as well, all of that has meant that your margins are just sub 18% at the end of the previous quarter, the numbers that you've reported so far. What are the levers for the margins to go further from here, and what's the headroom here?
Yeah, if you see our last 3 years, we have increased our EBITDA margins by almost 8 to 9%. And that has come as a combination of product margin expansion, operating leverage, and marketing efficiencies. So all these 3 levers continue to be relevant. And as we look at future, they will keep adding to the margin profile. There is a natural operating leverage in our business. And given that this is a high product margin business, the flow-through helps in overall, EBITDA expansion.
Gross margins of almost 68%, employee costs at 25%, your EBITDA margins are close to 18%. So realistically speaking, if all things work, your margins have a headroom to go all the way up to 25 to 30%. Is that directionally an aspirational number?
I would not get into direction of margin right now. I think as a business, I would still say that we are very early in the journey. Like I said, right now, of course, the business has hit a certain scale, and we like to believe that we are creating a lot of value for the customer, and we want to do that even further. It is too early, I think, in the journey for us to really set expectations for the numbers that you're talking about right now. I think our goal right now is how do we take our 16 million eye tests to 100 million eye tests a year. As long as we can do that, I think we would like to be focused towards that. Margins is a outcome. They have been, we have been fortunate that they are coming along, and let's see where they go. I'm sure we continue to surprise everybody.
Well, you have to. You better be surprising people. The reason why I say that is because, you're saying you don't want to set expectations for people so early in your journey and speak about adding value to customers and all of that and stuff. In the secondary market is the valuation that matters the most. And I'm looking at your numbers. You're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are, offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
And now increasingly shareholder as well.
Yes. And the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal here.
All right, we take that point. Let's wrap this up with a quick rapid fire, and we'd like you to, give as many numbers or as many, nuggets as possible in as little time. So let's start with the first one. Let's, market share.
No projections.
No projections. Current market close to 70,000 crores. Your revenue 6,600 crores. Sub 8% market share in India. Where do you see this headed?
Well, it's too early. I mean, we would want to, like I said, Maruti gave the comfort of four-wheeler to India. We would like to give the comfort of vision to India. We would want to give vision to a billion people eventually.
All right. Your margins from here on go how much higher?
Higher.
Much higher, not much higher, or very much higher?
I would say...
I think priority is right now growth. We are very small market share.
Okay.
But we will, the naturally flow through will be the compounding of margin.
All right. And
We're very early in the journey. Let's see.
revenue growth aspirations. You said growth is your target, India and international markets. Give us a sense. And
we have been growing well. I think can we do more? Yes.
30% CAGR over the last 3 years.
I won't set any
No,
expectations.
that's been happening over the last 3 years. So obviously,
Yeah. Let's see. I think I would say that we are still very early in the journey.
okay. 2x market growth is what he had spoken about earlier that you've been doing. Perhaps that happens. Your revenue mix, 60%.
I don't think he said that. I think you
I said market is growing, and then our numbers are out there for people to.
I'm allowed to make those projections, you're not. So, I'll just ask you whether directionally that's correct or not. 60% revenue from India, 40% internationally. Does that mix stay the same?
It will keep changing depending, how things are at different stage. Right now in India, we are in a high scale mode. We have been adding about 300 plus stores a year. International, we are integrating our tech. I think less relevant, I would say. It is something that you will see will evolve over the years.
4,000?
But international continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say
Possible?
definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. And that Abhishek said, we have 60 stores for 1 million people. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes, right? Out of that 80,000, let's see how many Lenskart adds.
All right. Your favorite Lenskart pair?
Hustler.
Yours is Hustler as well?
As of now, but very soon it's going to be something else. And looking forward to wear our camera glasses. I keep playing with them. There's one in my bag right now. I don't want to show anyone.
I like the new Meller as well.
You like the new Meller as well?
Actually, yes. The Meller is quite cool.
All right, that's the Lenskart management. We'll be watching out for this one. But we have